Going on YouTube, traders, investors? Today we're going to take another look at HEXO. We're going to look at where this stock may be headed, read some news about it, just get you totally informed about this stock and if you should invest in it. But for the life of me, I can't remember what they sell. Okay, I got it. Let's get into it. Before we get in the video, there's going to be a link in the description below for Robinhood. If you use that link to sign up, you get a free stock, I get a free stock, it's all good. And you stand a chance to get in a stock like Slack, Uber, Beyond Meat, Ford, Energy Transfer, CenturyLink, and many more. The best part about it, it's totally free. You don't pay a dime to buy or sell stocks. Options are also included. Please use that link in the description below. It'd be greatly appreciated. Thank you in advance. All right, here we are on the 180-day chart of HEXO, ticker symbol HEXO. As you can see from the last video I did a while back, I called out $5, around the $5 mark, maybe a little lower, as being the bottom for this particular stock. But what's transpired since then is the whole marijuana sector has went straight down pretty much. So I was wrong on that $5 call, around the $5-ish mark. I did point out some potential reasons why it would be there. I couldn't call out all this craziness in the market that drove a lot of things down, and how volatile the market is right now. Super volatile. Anyways, so this trend line, we're going to go ahead and delete it. It's no longer relevant. So we're removing it. And we're going to start some new trend lines. But we're going to talk a little bit right before we get in this about healthcare and what could be a possible catalyst for all these marijuana companies. It's in the news now that they're really looking into uses of marijuana. Like it's always been an alternative, but now healthcare is seriously looking into using marijuana as a treatment, which they should be. But anyways, so we're going to draw a trend line up here from this high. We're going to bank it right on there. That's the top trend line. We're going to take one from this low right here and go straight down right in there. So here's the channel, the downward channel that HEXO is in right now. Now it's approaching this top trend line to see possibly if we could break out. So I'm not telling anybody to invest in HEXO. I mean, I think that this is probably as low as it's going to go. All we need is some catalysts to get this stock back up. And like I mentioned before in the other video, they already have a joint venture with Molson Coors. And coming in December, they're going to have their marijuana infused drinks, CBD infused drinks. All that's going to hit the market once all the red tape is cleared in Canada. So, and it's looking like December. So let's go ahead and zoom in on this chart a little bit. They're hitting this trend line right now. They're at the trend line. And right now they've been, for the past couple days, above the 9-day moving average. So we're going to need to watch and see if we can break out from this trend line, this downward channel that we're in. But I do expect some resistance. We might pull back a little bit and try it again. But there is going to be some resistance right here at that 100-day moving average. So we're going to have to watch it and see. But the whole deal is, if you believe, like I believe, that marijuana is a trend that we're trending towards, get these stocks while they're cheap. Get them while they're cheap. I can't really say anything else than we're waiting on a catalyst. But I will say marijuana is a trend. That's pretty much going to do it for the chart. As you can see, it's not pretty. We're trading under the 200-day moving average, and the 200-day is sloping down. So, but it's subject to change. Nobody is 100% correct on these stocks. But HEXO is a player in the marijuana sector. So, moving on. Here we are on Yahoo Finance. This is an article that was posted September 3rd. And it's talking about how HEXO basically is a high risk, high reward type of stock, which if you know anything about cannabis, that's what it is right now. There's a lot of unknowns in the cannabis sector. But the article goes on to say that HEXO is down a little over 1% for the month of August, but the ETF MJ, which is an index fund that has a bunch of cannabis stocks in it, is down 11%. So, you know, that's a positive. HEXO didn't go down with the ETF. I mean, still went down, just not as much. But we're going to jump in the article, and it talks about what makes HEXO stock risky over the near term, particularly for those perceiving value here, is that there's actually a lot to like with this name. HEXO has an inviolable partnership and compelling business model. That business model I talked about in the first video with basically they have a multi-year deal with the Quebec province in Canada. So basically they're going to make money for the next up to 5 years, betting that Quebec renews the yearly contract. For the most part, HEXO executes well. However, the broader cannabis investment space is largely out of favor. I talked about that earlier, how the whole marijuana sector is on a downtrend. They're being drugged down with the sector. And also with all the crazy volatile stuff going on in the market. The article goes on to say there's some rays of light. We'll go into this. And it goes, one longer ranging factor in favor of HEXO stock is that the company, unlike so many other of the cannabis rivals, isn't carrying goodwill on its balance sheet. Analyst investors usually tolerate goodwill until it becomes a problem. So that's a positive. They're not saying this, that, all that intangible stuff on their balance sheet. And it goes on to say goodwill isn't a tangible asset. It's considered intangible related to a purchase of something intangible in which the buyer likely overpaid. So you're not overpaying for HEXO. Betting that the acquired business would eventually deliver growth that made overpaying for it a good deal. The problem with this strategy is that it doesn't always work out and leads to companies taking charges or impairments on that goodwill. So no goodwill with HEXO. Another area of strength for the company, and one that could be a long-term driver for HEXO stock, is its logistical superiority. The company has an array of strategically situated distribution hubs that can cement forays into important markets while keeping costs to a minimum. So there's another positive for HEXO with their distribution. It's possible that competitors will encroach on this model and adopt it for themselves, but HEXO has mostly mastered it ahead of its rivals. So that's talking about the deal I think that they have with Quebec province. Additionally, HEXO is growing revenue at an impressive rate, and the recent New Strike acquisition gives the company important scale. The rub is that with rising revenue and solid scale, come increasing analyst and investor demands for profitability. Yeah, and that's with all these marijuana companies. You're going to see these analysts and investors wanting to see profit, because that's why you invest in the company. You want that company to grow and generate profit. It says the bottom line on HEXO stock, wait it out. So if you're invested in HEXO, take this downtrend as a chance to dollar cost average down. You know, if you believe in this stock and you believe in the trend of marijuana, then average down. And it goes on to say, in the current environment, HEXO stock is being hit with a triple whammy. Cannabis, growth, and small cap stocks being out of favor. And yes, HEXO is a small cap growth name. Add to that, HEXO stock trades for 41 times forward earnings. So 41 PE compared to about a 21 on the S&P small cap 600 growth index. So that gets us back to HEXO stock not being cheap by any stretch. It's not cheap, but there's stocks out there with a higher multiple in this sector. The other issue for HEXO stock is that it closed around $4 at the end of August. But the average analyst price target is $7.20, meaning that the forecast needs to be revised lower, or that stock needs to start moving higher. It's likely the former happens before the latter. For risk-tolerant investors who just can't resist the allure of HEXO stock, let it stay around $4 for a few weeks before jumping. So, with that being said, if you're already in HEXO, like I said before, you believe in the stock, dollar cost average down. I do believe there's going to be some catalysts coming in the future for the marijuana sector that's going to start driving it back up. And that's going to conclude this video. Thank you for watching. If you liked it, subscribe, hit the like button, hit that bell for future notifications, and I will see you in the next video. Thank you.